We're jumping straight into new era energy and digital today. Everyone is watching the price action, but the real story is the massive pivot from helium exploration to becoming a major player in AI data center infrastructure.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds on this one, and I mean, looking at the sheer volume of court documents and filings you brought, there are some serious weeds. Make sure you hit that subscribe button and smash the like.
Please do.
Join the community. You don't want to miss out on the research that simplifies these wild market moves for you.
So, new era energy and digital. If you've been looking at the charts, you probably got whiplash.
Whiplash is, yeah, that's putting it lightly.
We are talking about a stock that has seen some just massive volatility recently.
I saw it surge up, what, 24% in a single day? And over 100% in a short time frame. It's behaving like a meme stock, bouncing all over the place.
It is.
But the company is claiming to be a serious infrastructure player. So what is the narrative that's driving this? Because on paper, this looks like an oil and gas company that just decided to change its clothes.
It was an oil and gas company.
Yeah.
Specifically, helium exploration.
Yeah.
But the narrative they're selling now is it's the holy grail of the current market cycle.
Okay.
The intersection of energy and AI.
Okay, pause there. We hear energy and AI constantly. It feels like it's on every earnings call from every company in the S&P 500.
It is.
So why is this specific company catching fire? Is it just buzzwords, or is there a real mechanism here?
It's certainly buzzwords, but they are addressing a very real, very expensive problem. We know that the biggest bottleneck for artificial intelligence right now, it isn't the chips.
Right.
NVIDIA has the chips. The problem is power.
So there isn't enough electricity to turn the chips on.
Precisely.
Yeah.
The grid is the constraint. I mean, think of the U.S. power grid, like a highway system built in the 70s. It was designed for a certain level of traffic. Now, imagine you suddenly try to drive a fleet of monster trucks down that highway all at once. That's what AI data centers are doing to the grid. It's just congested.
So if you're Amazon or Google and you want to build a massive data center, you go to the utility company and say, I need a gigawatt of power. And they say, what?
They say, get in line. We can hook you up in, 5 to 7 years.
5 years. In the AI world, 5 years is a century. By then we'll be on GPT-10 or something.
Exactly. That wait time is the killer. And that is where New Era comes in with their core thesis. They call it powered land.
Powered land. I saw that in their deck. It sounds a little like marketing fluff, but okay, let's unpack it. Is that just a fancy way of saying we own a field with a generator on it?
It sounds like fluff, I know, but the concept is actually critical in this sector. Powered land implies land that already has access to energy sources on site.
Right.
So you don't have to wait for that 5-year utility hookup.
And looking at their assets, they certainly have land. We're talking about 137,000 acres in the Permian Basin, specifically the Pecos Slope Field in southeast New Mexico.
That is a massive footprint. For context, that's larger than some small countries. But the key here isn't just that it's empty desert. This is energy-rich land. They have natural gas and helium reserves right there under their feet.
So this is the vertically integrated argument they're making. They're saying, look, we aren't just going to build a data center and hope the local utility gives us a plug.
No.
We're going to use our own natural gas reserves to power these centers ourselves.
Right. And the industry term for this is behind the meter.
Behind the meter. Okay, make that make sense for someone who isn't an electrical engineer.
So in front of the meter is when you pull power from the public grid. You're a customer of the utility.
Yeah.
Behind the meter means you're generating your own power on site.
Okay.
You're effectively bypassing the public grid entirely. You become an energy island.
An energy island. That sounds incredibly valuable.
It is. The public grid is so congested. Getting a new connection for a gigawatt-scale facility involves navigating federal regulations, state regulations, building new transmission lines. I mean, it's a nightmare.
Yeah.
If New Era can actually provide power directly from their own reserves behind the meter, that solves the biggest headache for the hyperscalers companies like Amazon, Google, Microsoft.
They need power now, not in 2030. And New Era is claiming they have the solution. But they aren't just sitting on land, right? I was reading about their recent moves, and they've been trying to prove they're serious about the digital part of their name.
They have. They recently announced the acquisition of Texas Critical Data Centers, or TCDC.
Right.
That was a $70 million deal.
$70 million. That's a serious chunk of change. That suggests they're putting real skin in the game, right? This isn't just a PowerPoint presentation anymore.
Ideally, yes.
Yeah?
And they're partnering with a group called Primary Digital. The stated goal here is, it's ambitious with a capital A.
How ambitious are we talking?
They want to build a 1 gigawatt capacity campus.
Okay, I want to pause on that number. 1 gigawatt. We throw these terms around. Megawatt, gigawatt. Put that in perspective for us. How big is a gigawatt?
It is enormous. 1 gigawatt is roughly enough to power 750,000 homes.
Wow.
It's comparable to the output of a standard nuclear reactor. A typical large data center might be 50 or 100 megawatts. So a 1 gigawatt campus, that's a mega project.
Right.
It puts them in the conversation with the biggest infrastructure players in the world.
And that explains the stock price. The market looked at this and said, okay, if they pull this off, if they transition from a resource explorer to a tech landlord with gigawatt capacity, this company is worth exponentially more than it is today.
They're pricing in a successful pivot.
It's the ultimate picks and shovels play for the AI boom.
Exactly. You aren't betting on which AI model wins. You're betting on the physical space and power they all need to run. If you control the power, you control the bottleneck.
It sounds perfect, doesn't it?
Yeah.
You take cheap land, cheap gas, build some sheds, fill them with servers, and print money. Why isn't every oil company in Texas doing this?
It does sound perfect.
Almost.
A little too perfect.
And here is where it gets really interesting. Because when you scratch the surface of this powered land thesis, things get a little, well, complicated.
That's putting it politely. Let's look at the flip side. We have to talk about the blue sky trap. Because while vision is grand, the reality of the company itself raises some massive red flags.
Let's start with my favorite statistic from their filings. I was digging through the 10K and I was expecting to see this huge organizational chart. You know, for a company building a nuclear reactor-sized project, you'd expect hundreds of engineers, right?
You would certainly expect a substantial team, yeah.
Do you know how many full-time employees New Era listed?
I do. It's 7.
7. Not 700. 7.
7 people.
I have more people in my book club than they have running this company. How does a 7-person team execute a 1 gigawatt billion-dollar data center build-out?
That is the multi-billion-dollar question. Let's really think about what a project like this entails. You need civil engineering to grade the land. You need complex electrical engineering to handle high-voltage transmission. You need cooling systems, environmental permitting, regulatory navigation with the EPA
Right.
and state boards. You need construction management to oversee thousands of contractors.
And you need someone to just answer the phones.
Right. Now, the counter-argument is that they outsource everything. They hire an EPC, an engineering, procurement, and construction firm.
Sure.
But even if you outsource, you need a substantial internal team just to manage those contractors. If you don't have the internal expertise to verify what the contractors are doing, you are flying blind.
So 7 employees suggests that right now this is very much a concept, not an operational juggernaut. It's a management team and a vision, but the execution capacity is thin.
Thin is a generous word,
Yeah.
but the employee count, that's just the appetizer. The main course of the bear case is the legal situation. And folks, it is messy.
It is shockingly messy. I was reading about the lawsuit from the New Mexico Attorney General. This isn't some, hey, you forgot to file a form lawsuit.
No, not at all. The state attorney general sued the CEO and his associates for an alleged fraudulent oil and gas scheme involving 87 wells.
87 wells, that's not a small oversight.
The allegations are serious. They claim the company failed to clean up these wells and engaged in fraudulent behavior regarding the operations.
Yeah.
Now, to be fair, the company has pushed back.
Okay.
They've called the lawsuit baseless and said those wells are immaterial to their new business.
So they basically said, hey, we're a tech company now. Don't worry about those old oil wells.
Pretty much.
But the market didn't like it. Before this recent pop we talked about, the stock had plummeted, dropped something like 41 to 48% on the news of these lawsuits.
And it's not just the state of New Mexico. You have a conga line of law firms, Rosen, Pomerantz, others, investigating securities fraud.
Now, I know what some listeners are thinking. Those are just ambulance chasers. Every time a stock drops, these law firms pop up.
And that is often true. But in this case, they're sniffing around specific allegations of sketchy related party dealings and false promises.
That phrase, related party dealings, always makes my skin crawl. Can you translate that for the listener who might not be a forensic accountant? Why is that such a red flag?
It's kryptonite for institutional investors. Related party dealings usually implies that management might be doing deals that benefit themselves or their friends rather than the shareholders. For example, if the company hires a construction firm owned by the CEO's brother and pays them double the market rate, that's a related party dealing.
So money leaves the shareholders' pockets and goes into the insiders' pockets.
Exactly. And when you combine that with a CEO who has allegations of running previous ventures into the ground, it just creates a crisis of credibility.
And credibility is everything when you're selling a vision. Remember, they don't have the data center yet. They are selling the promise of a data center.
That's it.
If you can't trust the people making the promise, the whole thesis just collapses.
And that leads to the financial opacity. We're looking for hard numbers to back up this valuation. But when we dig for the 2025 10K or recent revenue figures, what do we find?
Crickets. Absolute silence. We can't find clear recent revenue data for the digital infrastructure side.
Right.
We know they had revenue from the helium and gas side, but that was legacy. For the new business, it's a black box.
And there are allegations floating around that the company has spent more money on stock promotion than on actual operations.
Ooh, that is the classic red flag for a pump and dump. If you're spending millions on PR firms to tell people how great your stock is, but you aren't sending money to actually build the thing you're selling, well, you can draw your own conclusions.
It connects back to the moat argument. The bull case relies on this idea that their land is a competitive advantage.
Yeah.
But we have to ask, is it?
Is it? I mean, 137,000 acres is a lot of land.
It is a lot of land. But land is a commodity. There is a lot of land in Texas and New Mexico. The hyperscalers, Amazon, Google, they have infinitely deep pockets. If they want land, they can buy land.
They can buy better land.
They can. They don't need New Era to get land. They need power. And while New Era has the gas, do they have the technical capability to turn that gas into reliable 99.999% uptime electricity for an AI cluster?
That's a very different skill set than drilling a hole in the ground.
Exactly. That's the key. Data centers require 5 nines of reliability. If the power goes out for 3 seconds, you lose millions of dollars in compute time.
Yeah.
Does a 7-person team with a background in helium exploration have the expertise to guarantee that level of uptime?
That is a terrifying question if you are holding the stock. Without proprietary technology, and we haven't seen any evidence of groundbreaking proprietary tech here, their competitive advantage is just weak.
It is.
They are essentially a landlord trying to be a power company, trying to be a tech partner. It's a very difficult straddle.
So we have a massive vision, 1 gigawatt, AI revolution, vertical integration, and we have a terrifying Reality 7 employees, fraud lawsuits, and opaque finances.
Yeah.
It is the ultimate high-risk, high-reward scenario.
It feels binary, like there is no middle ground here.
It's absolutely binary. Either they pull off the impossible, navigate the lawsuits, build the plant, and become a unicorn, or this whole thing unravels under the weight of legal fees and broken promises, and the stock goes to zero.
So for everyone listening who is holding this bag or thinking about buying a ticket for this ride, what do we need to watch? We can't just guess. What are the signals in the next 30 days that tell us which way this is breaking?
There are 2 main buckets to watch: financials and operations. First, the financials. We're coming up on reporting season. We need to see the Q4 2025 or the full year 2025 report.
And we aren't looking for adjusted EBITDA or community-adjusted vibes or anything like that. We need to see revenue.
Specifically, digital infrastructure revenue.
Yeah.
We need to see if that pivot is generating a single dollar yet, or is it all still blue sky? Right. If the report comes out and it's just more losses from the legacy business and zero revenue from data centers, the narrative takes a huge hit. It confirms they're still just telling stories.
And alongside that, we have to watch the legal wire.
Yes. The New Mexico AG lawsuit.
Yeah.
Any settlement, any hearing, any motion to dismiss, that is a major catalyst.
Why is that so critical? I mean, companies get sued all the time.
It's critical because of cash. Litigation is expensive. If they lose, or if they have to settle for a massive fine, that drains the capital they desperately need to build these data centers. Every dollar spent on lawyers is a dollar not spent on transformers and concrete.
They need that cash for concrete and copper, not legal settlements. Okay, so that's the paperwork side. What about the actual building side?
The operational milestones. And the biggest one is the anchor tenant.
We hear rumors all the time. Oh, they're talking to Google, they're talking to Meta, but rumors don't pay the electric bill.
Exactly. We need a signed, binding contract.
Wow.
An 8K filing that says Company X has committed to leasing 200 megawatts for 10 years. Until you see ink on paper, it's just talk.
Right.
In this industry, memorandums of understanding or letters of intent are often not worth the paper they're written on. They're non-binding. We need a binding lease.
And we also need to see progress on the Texas critical data centers integration. They bought it for $70 million. Are they actually building? Are there cranes in the sky? Or is it just a press release?
Right. If we get an update showing construction progress, permits being issued, transformers being delivered, that is bullish. That shows real execution. If we get radio silence, that's a worry.
So let's unpack this entire situation. We have a company that has reinvented itself overnight to chase the hottest trend in the market. The stock has doubled, then crashed, then popped again. It's a roller coaster.
It is. And it represents the dichotomy of the current market cycle perfectly. On one hand, the demand for AI infrastructure is real and insatiable. The macro tailwind is a hurricane. On the other hand, whenever you have a gold rush, you attract. Let's call them opportunists.
Opportunists, that's the polite word for it.
New Era Energy and Digital is a lottery ticket. It's not an investment in a stable cash flow business. It's a bet that this small team can navigate a minefield of legal trouble and actually deliver on a massive infrastructure project before they run out of money or credibility.
It feels like they're trying to fly a plane while they're still building the wings, and also the passengers are suing them, and the pilot might be reading a how-to-fly manual for the first time.
That is a vivid image and probably uncomfortably accurate.
So is New Era a hidden gem that's going to power the AI future, or is it a classic promote scheme using buzzwords to mask a troubled legacy business?
The market is currently giving them the benefit of the doubt, pricing in that successful transition. But the risks, the 7 employees problem, the fraud probes, those are not priced out yet. They are looming.
Here's the thought I want to leave you with today. We always hear that in a gold rush, the best business is selling shovels. Everyone repeats that cliche. Selling shovels is great.
It is. It's supposed to be the safe bet.
But here's the catch that I think New Era highlights. You have to actually have the shovels.
Right. You need inventory. You need supply chains.
With only 7 employees, no visible revenue from the new business, and a mountain of legal paperwork on the CEO's desk. Does this company actually have the capacity to dig? Or are they just selling you a map to a mine they don't even own?
That is the crucial question. Are you buying infrastructure or are you buying a story? Because right now the price tag suggests infrastructure, but the filings show a story.
And stories can be expensive, especially when the ending hasn't been written yet.
They certainly can be.
That's the lowdown for today. We will keep tracking New Era to see if they produce concrete or just more court dates.
And we'll be here to break it down when they do.
Thanks for listening to the Easy Money Show. If this helped you see through the hype, hit that subscribe button. We'll catch you on the next one.
Stay curious and trade safe.